Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 29th of March 2019. I'm Darren Sinden, and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And not the busiest of sessions, it must be said, or the most active of sessions on the global foreign exchanges. Nonetheless, still a few talking points. First of all, gains in Europe for both the euro and the pound sterling against the US dollar. Though I don't think those daily moves really tell the full story. If we look in both cases, the weekly moves are showing we're still finding both the euro and the pound down against the US dollar over the course of the week, and in the case of the pound, down by more than 1% currently. There were gains elsewhere in Australasia for both the Australian dollar and the Kiwi. The Aussie up by 0.31% overnight against the US currency. It's New Zealand dollar adding 0.34% against its US counterpart, although the Kiwi, as we can see here, still remains down on the week and still has some work to do after that surprise comment from the Reserve Bank of New Zealand. Elsewhere, dollar index pretty much unchanged on the session, down by 0.02%. No great shakes there. There was a modest gain for the US dollar against the Mexican peso, which added 0.1%. And there was a similar move in the opposite direction for the dollar against the Chinese yuan. Okay, what's on the calendar? Events that may move the markets today. A pretty busy calendar, to be said, although there's not too much high impact data in this. But we've already had out this morning at a minute past midnight the GfK consumer confidence data for March out of the UK. A slight improvement. Still very much on the negative side, but better than the consensus forecast and in line with the previous month's read. To come at 7 a.m. GMT, we will have retail sales data for the month of February out of Germany. It'll be very interesting to see how German consumers have been feeling. The manufacturing economy, they're obviously taking a bit of a downturn. Big employer manufacturing, so are people still spending money? We'll have to wait and see. At 07:45 GMT, we cross over the border into France for consumer price index data for the month of March. A preliminary read this, nonetheless, it'll be interesting to see how inflation is faring in the French economy. At 8 a.m, we cross over the Swiss-French border to receive KOF leading indicators data out of Switzerland for the month of March, and then we're back in Germany at 8:55 GMT for German unemployment for the month of March. At 09:30 we cross back over the channel to the UK for British gross domestic product data for Q4, and then we pause before jumping over the Atlantic to the USA, and at 12:30 we'll have core personal consumption, personal spending and personal income data out of the USA. The consumption and expenditure data is for January, the personal income data for the month of Feb. Also at 12:30 and just over the border in Canada, we'll see the release of gross domestic product. This is a monthly print for January. At 13:25 we'll have the first of the day's central banker speeches, and this from Fed member Williams. And then at 13:30 we should see the start of a series of votes in the UK Parliament on Brexit. At 13:45 we shall have the Chicago Purchasing Managers Index data for the month of March, and that'll be followed at 1400 by the Michigan Consumer Sentiment Index, also for the month of March, and obviously both of those figures out of the USA. Staying in the States, we'll have new home sales for February, and that'll come out at 1400 GMT. And then to round off the day, two central banker speeches, Fed member Kaplan speaking at 1430 GMT, and their colleague Quarez speaking at 16:05 to round off proceedings as far as high and medium impact data is concerned on today's economic calendar. Okay then, breaking news and comment that's caught my eye overnight. And first of all, US Q4 2018 GDP was revised downward to just plus 2.2% of growth, well below the prior reads for Q4 that we'd seen earlier in the year of plus 2.6%, and the 3.4% print seen in Q3 2018. That suggests that growth in the US economy has indeed been slowing. Meanwhile, Chinese equities have rallied sharply as consumer-related stocks, including Huawei, post solid figures. Stocks bounced in China despite mixed messages over the progress of US-China trade talks, which should resume again today in Beijing. Staying in Asia, housing starts in Japan during the month of January blew past market expectations, printing up by 4.2%. Versus forecast for growth of just 0.5%. This was the third month of positive growth in the number and the best reading since January 17, or January 2017 I should say. So there are signs of life in the domestic Japanese economy, but perhaps not in the quarters that we'd normally look for them. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? The question I'd like to ask is what's happening to the Chinese economy? Obviously, we've heard that Chinese stocks have rallied strongly overnight. What's happening on the ground locally then? Well, Credit Suisse, interestingly, looked at this earlier in the week. They found there were some signs of optimism in the domestic Chinese economy. They found that China manufacturing PMI new orders elements have picked up and that the macro surprises from the country are now positive, and there's a chart that plots those two metrics against each other here. But they also flagged that the PMI subcomponents showed that improvements have been broad-based across a variety of market areas, and that inventories have generally been falling, suggesting that companies are destocking and doing so in the face of demand. They further flagged that PMI new orders versus inventory had picked up on both the National Bureau of Statistics and IHS market measures, again suggesting that there are signs of a bounce back in the Chinese economy. And finally, that domestic demand has been much stronger than external demand as far as new orders are concerned. And there's a big differential here: domestic new orders picking up and the international new orders slowing down. So it seems that if there is to be a recovery in China, it will be driven by local market forces rather than external ones. Okay, it's risk warning time. Please do take a moment to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're not sure about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time, as I say, please, to read this risk warning thoroughly. Thank you for your time today. Have a good trading day and a good weekend.